Crude oil stayed bullish last week, yielded another green candle. Last week in our review, we have mentioned that as long as higher lows are respected, we can expect another bullish candle, and precisely it has gone close to $90 levels, 89.8 to be precise. Yes, it has also yielded lower highs, higher lows, more of consolidation here. So, what to expect from crude next week? Is it going to break past the $90 levels and stay bullish from here, or we can expect a possible pullback? As the body size is small, can we expect it to reverse from here and yield another red candle? Which position you should take in order to profit trading crude oil next week? We will see with the help of chart and indicators, as indicators do suggest the moves here. You can see the crossover, the divergence, the convergence towards the moving average, and still staying bullish. This was a good sign for the bulls. Also, the moving MACD is also still in green. So likewise, we will analyze more in detail. Do watch till the end. First, we'll look into the charts alone, followed with indicators, and towards the end, I will give you the trading strategy and summary for the next week. Yes, the critical levels will also be provided. In order to stay tuned with my daily updates on crude oil, twice a day I share my daily updates on crude oil. First with the Asia and Europe session, and next with the US session. Do watch both the updates. Definitely it will add meaning to your trading decisions. Also, to get the updates, you can join my free Telegram channel. The link is mentioned in the channel and video description. And press the bell icon. Let's start. First, we look into the daily charts, and before we proceed, if you appreciate the effort, do like, share, subscribe, and comment, friends. Your every like, comment, and share is a great motivation. First, on the charts, you'll find the base was created, reversal sign was seen, rise, retracement, and staying bullish here. After the bullish move here, now you can look at the oil is staying in this zone. This time, this candle has failed to break past the highs of this channel and retrace from close to $90 levels. Now, $90 is definitely a critical resistance. And this we have seen last week also, that 90.2, 89.8 is going to be the maximum resistance zone. Beyond that, the bulls will take over. Now, most importantly, on the daily chart, see higher highs here, lower lows here. The pivot is at 87, and this is what in the last trading session also I mentioned, that only and only if the price stays below 87, you can say that the bears are taking over, and we can look forward to 86 and 85 levels. Now, one must know that crude oil for the near future has maximum support now at 84 levels. Only below 84 is where the bears will take over. Also, if you look at the movement of crude oil here, see after achieving the highs, this was the sharp retracement. Also, if you note this movement here, you will observe higher lows, higher highs. So, is it going to move towards $100 levels? This is the question we need to watch out, and we need to discuss with in the end of this video, because the indicators will definitely give us some signal whether it is going to break out or not. Yes, the higher highs, higher lows towards the end suggest that still there is slight bullishness. Coming to the week, now look at the weekly charts. At this point, I have mentioned that the bottom is done and the possibility of a reversal will be very, very high. We were looking forward to 92.5, 95 levels, and if you look at, this is the larger, broader channel in which oil is trading. Now, another point here is the reversal sign, and after the reversal, the major drop and couple of retracement candles. Now, this is still to be treated as retracement as long as prices fail to break past by 92.4 zone. Yes, only and only if 92.4 and then 95 is breached, you can say that oil is reversing. Else, what has happened last week? See, after the drop, higher lows, first bullish candle, then the second bullish candle here, and yes, this candle also has a smaller body size. This suggests that once the prices breaks below 85 and 84.5 levels, you can say that the bears are taking over. After the drop, the retracement, and then this is going to continue to yield a sharper bearish move. So this is the reversal sign. First bearish candle, couple of retracement, and then it can resume its downward journey towards 80 and below level. This probability also exists very, very high. But then, yes, this is applicable only and only if first 90.2 and then 91, 92.4. This zone is going to remain a critical resistance zone for oil here. Also, one must note that multiple candles here closed below 92.4. This is also a sign that these levels are going to remain stronger here. We have seen multiple candles getting the support at 92.4, 95, and then the resistance at the same zone. Now, let's also have a look at the monthly. Now, Looking at the monthly charts, you'll observe higher lows are done, higher highs, and once it breaks past by 1992 90.2, you can say it can march towards higher highs. There is a probability to it. At the same time, any closer around these towards 82 84 levels certainly should be a sign that the next candle could try to reverse, could try to make the prices go bearish again. And thus next is going to remain critical for oil. Which direction it is going to take is going to decide the direction for crude oil for the next few weeks here. So this is something you should watch out for. Also, if you look at the monthly chart, see multiple candles getting reversed at the same zone. This time again it has reversed and it is closed below this zone. So this is very very important. $90 levels have become a critical resistance for here. And also if you look at lower highs, lower lows are done. So just prices are going to stay within the zone. That is what is appears as of now. Now let's have a look with the help of indicators. If you look at the indicators, the moving averages are trading one over other, and this is a bullish sign. It has taken the support from the 20 period and now reversed. But is it a reversal? We have to wait and watch where this candle closes here. But yes, 20 period moving average is close to $80 levels, is indeed a great support. If you look at the monthly stochastic, this has come to overbought zone with the just four green candles. It has come to overbought levels and now trying to look downwards. Thus, this candle might remain in red, and it appears that the highs at 92.4 should not be breached. Only beyond this, it should be treated as bullish. But the most important part is the conversion of MACD on the monthly charts. And this is very, very important. If you look at the movement here, see first wave, second wave is done. And if this crossover is seen, you can say that the oil is turning into a bullish territory where in the next month, or in fact this month itself, $100 levels can be expected. Be very very careful. See, this is the first wave, this is the second wave done, higher highs, higher lows, and thus this crossover means to oil very much, because this crossover may bring bullishness. RSI comfortable here. Coming to the likewise on the weekly chart, see the prices were divergent from the moving average, converge. Too much of divergence, then the strong conversion. Also, one must note that the moving averages have just crossed over, and these are trading with divergence and bullishness. Thus, the zone here at 80-82 is going to remain a very very strong support zone, even if it tries to show you a drop here. Yes, this crossover, bullish crossover on MACD has on exponential moving average has come after a long time, and hence it may try to stay here for a. So thus we have to be watchful at the zone here at 80-82. Stochastic has dropped. It is looking downwards, staying bearish. The MACD is still in green. It has not yet crossed over. Also, one must note that see this was the bottom after the sharp drop. It has stayed here. It is now trying to converge a bit. Means couple of red candles can be expected. But then ultimately there is further bullishness which is left there. RSI is also dropped and now trying to recover. Coming to the daily, on the daily charts, prices retest towards the 100 period and has since then traded in this bullish zone. Now, if you look at higher lows, higher highs, the support here at 86, 84 is the strongest support for crude oil. Yes, price is staying above the 20-50-100 period moving average. This is also a good sign for the bulls here. And yes, the moving averages are divergent. Again, a bullish sign here. Stochastic overbought, this possibly calls for a slight drop, but if you look in conjunction with MACD, see MACD has crossed over at bottom, only 3 candles away. This suggests that it is still got room for it to continue on the upside. Also, if you look at this crossover has come after a long bearish move, thus it calls for a little bullish move on the upside, and this rise can be sustained for a while. However, the next week is going to remain critical. The direction which in which it breaks out is going to remain the direction for the oil for the next few weeks. RSI has retraced, trading comfortable as of now. Also, let's have a look at the 4-hour. Now, on the 4-hour chart, the rise, the retracement, the rise, the retracement, the rise, the retracement, yes, and the moving average is consistently climbing up. Yes, higher lows, higher highs, and it is accelerated bullishness which we are seeing as of now. Thus, first of all, the drop below 87, 87 is now going to remain the major. This is also the median of the price movement what we had seen. Thus, below 87 is where the bears will take over, and then you can look forward to 86.5, 86, 85, and 84. Only below 84 is where the bears are taking. If you look at stochastic, this has dropped. MACD is crossing over here for sell. This is the first cross, second cross, and third cross at a higher levels. calls for a further retracement on the 4-hour charts here. Yes, these are the levels from where we have seen a reversal in oil always. RSI is also trading comfortable. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategies so that you can trade profitably here. And before I provide you the trading levels and strategy, if you want to learn this art of trading, you can join my mentorship batch. The 26th batch started on 16th of October, 27th batch is going to start on 20th of November. Register yourself now itself, reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, if you appreciate the effort, do like, share, subscribe, and comment. Do press the bell icon, which keeps you updated with the twice a day analysis on crude oil. And remember, equipping yourself with the right tools, techniques, and strategies which can help you identify potentially profitable trades across the indices and commodities. This mentorship batch definitely will help you become a proficient trader. So must join this batch, invest in your learning first. Now first let's talk about the levels. Though I will expect it to get the little resistance at 88.5, 88.6, but still you can buy here at 88.6 itself, wait for 89.2, 89.8, and then 90.2. Now this zone is going to provide the first and very strongest resistance. Any move beyond 90.2, I will look forward to 90.8, 91.5, and 92.4. Now this is the zone where oil has the maximum resistance. If it achieves these levels first, it is going to show a sharper drop later. And this is the next, this is the first zone, this is the second zone where one has to be watchful, careful, attentive. It can reverse any point of time from any of these levels. Now on the one can sell here at 88 itself, 87.6 first support, 87.1 the next support. Yes, if it breaks below this zone, more bearishness is going to prevail. In fact, even if it drops here 86.5 and 86 the next support levels, in and then below that every half a dollar at around 85.5, 85 the major levels, and then 84.2 levels. Yes, these are the key support levels here. You have to be watchful, careful. 84, 86 zone is completely a great resistance, and then below that it is going to drop to 80 to 80 zone. I still do not see that probability there that dropping towards 80 to 80, but yes, a slight swing or bearishness can be expected on the upside. Be careful of 90.2 and 90.8 levels. Beyond that, sky is the limit. We are looking forward to a massive rise there. Beyond 92.5 directly it will strike towards 95 levels, and then sky is the limit. So take your trades accordingly. Trade with a stop loss and a trailing stop loss. Do like, share, subscribe, and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.